I'm going to cover immediate asset write-off now because this is something that I think should be worked with the tax carryback loss.
Yep.
This strategy, I've already helping out businesses that are trading well and also break even to maximize. So the concept is businesses with turnover of less than 5 billion again. I don't know where they come up with this $5 billion.
I just want to see how many small businesses trade over 5 billion.
Exactly. But anyway, I think they want to cover everyone, okay? Most Australian businesses. So businesses turnover of less than $5 billion can claim upfront tax deduction for the cost of any new business asset. Let's just sink that in. Any new business assets. So there's no cap. There's no cost cap, not limited like previously, the 150,000 initiative. So, and it's multiple as well. So there's no limit of 1 or 100 items.
Oh, wow. Just whatever you need. Just go out there and get it. They're pretty much saying, just spend, build your business, invest into your business, get all the assets, if it's equipment or if it's, a place or new construction, whatever it is, just go spend and make it happen and build your business.
Yes.
That's how I read it.
And it's not just paying cash. It's also on hire purchase leases or finance lease as well. So you don't have to give upfront, the cash to purchase that asset as well, but you can still claim upfront.
Oh, wow. So you can go on a finance plan to pay something up over time, but have the tax write-off upfront.
Correct. Yep. So they're certainly bringing forward the tax benefit, the cash flow in the pockets of entrepreneurs so they can spend now. Isn't that clever?
That's very clever.
Yeah. So this applies to capital assets from the date 6 October 2020 and the cutoff date is 30 June 22. So literally we have a massive window of almost 18 months to do this install to happen. And I've got an example here too. So if you bought a new truck of 60,000, you can actually claim that 100% tax deduction in this year. This does not mean that you get 60,000 tax back. It just means you get 60,000 at the marginal tax rate that you pay. So if you're a company, for example, this year, it will be 26% times 60,000. So it's roughly at almost $19,000 tax back. And secondhand goods and assets are included as well, Phil.
So you're setting up a new factory or a new restaurant or something like that, you can get secondhand goods and it's still okay.
That's right. So more small business with less than $10 million can use the simplified depreciation rules. If you're not sure what that is, that's just the first year you can claim 15% in your depreciation, and the second year 30%. Your accountant will know more about this. And if you had carry forward balances from previous years from assets that you bought and it hasn't been fully depreciated, then you can write that off this year.
Wonderful. So if I'm halfway through a high purchase of a car or equipment, instead of waiting, I can do it all now. Right?
Absolutely. So I'm very surprised if many of my businesses are paying tax this year. In fact, I'm expecting a loss, because of the small business immediate write-off and also the carryback losses. Many businesses will be able to make a loss this financial year, so that they can then utilize the carryback losses for say 19 year. If they were paying tax in that 19 year. So it is exciting. Tax planning will allow you to bring forward deductions, right? And it will maximize the losses and maximize the carryback losses to ensure that you can receive any previously paid tax in this year.
Now, they're two big wins for businesses. Definitely. I can see how a lot of potentials and a lot of flexibility in what you can do. I'm getting excited thinking about my own businesses, that's all.
Yes, and it is a massive opportunity for entrepreneurs, and we do have as I said, we do have a 7-month window to help you guys to make sure that you don't miss out. It might require restructuring of your business entity. It might require bringing forward some high purchase asset purchases. It might require just having a look at what other expenditure or capex that you want to spend in your business. But all that thing it needs time. So yeah. That's why I put the tax tip that instead of waiting for tax planning in May and June, we are doing tax planning now in November and December now. So
that's it. You want to maximize that time and get things right. What else has the government got for us in terms of these tax benefits for businesses? Okay,
so on the theme of business recovery, of course, you have to build and upskill your team. Okay, so if your business is scaling up, you need a team to support you to build extra sales and deliver the service. So the government,
all the new employees, all the new jobs that they're talking about,
Absolutely. So the government has allowed an incentive to do that, and that links back to FBT Changes. They've removed FBT on car parking and portable electronic devices, which links back to working from home. So if you bought your team member laptops and from 1 April 21 and set them up home office or retraining and reskilling them, then you don't have to pay FBT, which is a fringe benefit tax that had to be paid before. Okay, so that's a win for business owners again, and encouragement to invest in their team even further and upskill them so that they're ready to recover their business.
Like similar to the individual taxes, the more the business can keep, that means the more we can build the business.
Absolutely. So we and R&D is another one I wanted to mention for small companies, less than 20 million. So if you invested in research for your business, you're in a better way of doing things in your business, like mainly in medical or science, or then you can receive an R&D tax offset, will be set at 18.5% above the company tax rate, and there won't be any cap on annual cash refunds. So you actually get some of the R&D expenditure refunded to you as cash. So I think that this budget has everything to encourage reinvesting, upskilling, tax cuts, what do you name it, bring forward deductions, tax deductions. It is designed to incentivize business owners to take action. What do you think, Phil? Have I missed anything?
No, they've covered so much. I think what we're going to talk about next is about how to even support further with the employee side of things. Employees are the biggest cost to business, and especially small businesses. Like each employee brings in such a demand on the business in terms of financially, in terms of responsibilities, and the government looks like they're going to help us out in that area as well. Very specifically, though, can you run through that for us?
You know that the end of JobKeeper is March next year, and JobSeeker is tapering off as well. So to avoid the cliff hanging immediate cut, and then all these businesses not able to transition without the JobKeeper, they have introduced a job maker hiring credit. Okay, and I think this is a clever way to encourage businesses that were dependent on JobKeeper to be hiring staff that they need to recover their business. So the concept is it's eligible for employers over 12 months from 7th of October 2020 for each additional new job they create for an eligible employee. And this again favors the young workers. So under 35 is eligible for it. So unfortunately, mature age and wisdom, people like us is out of the market.
I'm out.
So if you're over 35, you just have to be a business owner, because you're not going to win from this job maker. Now, $200 a week for hiring someone under the age of 29. So they're really favoring the young, 16 to 29, and $100 a week for taking on someone aged 30 to 35. Now, of course, the young and the young people are generally casual workers, and they're the ones that were stood down first. So I guess this is the government's way of giving back a bit to the young people, to encourage employers and entrepreneurs to hire some of these young people back and give them opportunity. They're paid quarterly in arrears and will be available from 12 months from the date of employment. So it can start now with a maximum amount of $10,000, $400 per position, which is not bad. That's almost half of JobKeeper. So if you compared it to the JobKeeper 1.0, the requirement they need to do is 20 hours a week. Yes, average 20 hours a week, average over quarter. And they had to have been on job seeker payment, youth allowance, or some parenting payment for at least 1 month out of the 3 months prior to when you engaged them or employed them. So really this measure is targeting to get people out of job seeker and into jobs. So that's a win for
more permanent jobs. Yeah. So, if I was a young uni student and I got stood down during the pandemic because all the casual jobs were gone, I can now go out and find a more permanent job. And
don't forget the apprentice, boosting apprentice commencements as well, the 50% wage subsidy. So this one is more aligned with apprentices. So you have to be an industry that can apply that. So mainly construction is a big one. So if you're thinking or needing more staff in that industry, then have a look at this apprenticeship. So subsidy is paid in arrears and is available for wages paid from 5th of October 2020 to 30 September 2020, up to a maximum of $7,000 per quarter. So if you multiply that up, it's actually quite a lot. 7 times, how many quarters? 3, is it?
Four quarters.
4 quarters, so that's $28,000 per year.
That's significant.
It is significant, yeah. So if you missed out on JobKeeper Those two measures, job maker and the apprentice wage subsidy, is the one that you should be looking for to review your workforce and to maximize the hiring credits that are available in the budget. So don't be despair that you're out of JobKeeper. It's actually a good thing that your business doesn't need JobKeeper at the moment, but make sure that you also maximize your opportunity to hire good new staff and fresh energy in your business right now.
That's great. And this all works. So you got all the people that you're retraining, all the new people entering into the job market, and see the real big push for a whole revitalized workforce.
That's right.
That's generally about businesses. Now, during this whole pandemic period, some businesses have virtually shut. Some are hanging on by the skin of their teeth. But some of them actually thrived and done better than they were before the pandemic because of all the economics, and depending on what business you are, it's such a large range. But how does someone know what type of business they're in and what type of situation they're in, and how to apply a lot of these strategies to make it work for them?
Yeah, so Phil, like over my 15 years of observing thousands of business owners, I've come to categorize there's three types of business that arisen from this pandemic. The business type one are the ones that are lost and non-sustainable. And those are the ones in the past year would have observed that their business is not making a profit and is likely to continue this way in the short to medium term future. And we know that you have worked very hard to keep your business running, and this is a great credit to you, but it's difficult to say that in your best interest, you may need to review your business model. It's a concern that if you continue to operate your business, you're going to dig a deeper hole for yourself and your family, and the losses will continue to build. So if your business must close down, you may lose your personal asset, your home that you're living in, and if you've given personal guarantees to anyone, that is the danger. So if you're in that type of business, I highly recommend that you book time to sit down with your accountant to help you. Especially if you're still on JobKeeper, you still have until March, but really now is the time to do something about it. Should you close or should you continue? That is a decision you need to make right now. Business type 2 are the break-even businesses, okay? If you recognize your business in these criteria, then you need to have a plan to ensure that your business returns to profitability, to ensure that your business has enough funding to continue to operate until it returns to profitability. Break even means that your sales minus expenses, either a small profit or a zero profit, not enough to pay taxes and not enough to pay yourself as an entrepreneur. You also need to review your personal assets, your home, all your investments. If they're in your name, do you need to restructure now to ensure that you have appropriate asset protection strategies in place right now? Otherwise, you may lose your hard-earned family wealth that you have spent many years to build up. And that will be such a waste of your energy and time. So for break-even businesses, if you're likely to continue this way in the short to medium term future, then, we understand that that's not the way to run a business. I mean, it's not satisfying to just break even. You got to see if there's ways to continue to operate. What are the things you need, like funding? Do you need a cash flow plan the next 12 months? And then asset protection, like restructure, and I said. The last business type are the ones that have pivot during this pandemic, okay? Pivot from the beginning. They're the ones trading well, and they're actually doing better than before and yielding a profit. So if you observe your business as trading well during these difficult COVID times, then it's likely to continue this way in the short to medium term future. And I know you've worked very hard to pivot your business to keep it running well, and that's a credit to you, so well done. How we can help is that you also need to plan to ensure that your business benefit the best way possible from the new released measures in the 2020 federal budget, because you don't want to be finding yourself you're paying half of that in tax and donating to the ATO next year when you lodge your tax return. Also, you need to review your personal assets, because you need to ensure that you have appropriate asset protection strategies in place as well. Otherwise, you may also lose your hard-earned family wealth that you have spent building up over the years if things don't improve in your business later on. So we have special tools to assess what type of business you are, whether it be in a loss, break even, trading well, and that will allow us to help you what strategies and plan going forward to maximize the profitability of your business and minimize your tax. So I'm going to cover a couple of things that you should, the key areas that we help, as I mentioned. So these are the key areas and the questions you need to ask yourself. So number one is the personal tax reduction. Should I inject these personal tax savings in your business to keep it afloat? Second one is carry back losses. Did you have a company that paid tax in 2019-2020 year? If yes, should I take advantage of this measure? The next one is the immediate asset write-off. should you inject funds into your business to be able to purchase asset and claim an immediate asset write-off? If you are type 1 and type 2 and you're thinking whether or not you should continue your business, the insolvent trading protection rules have changed. Should you appoint an administrator or liquidator to your business before 31st December 2020, when the insolvent trading protection runs out after that? So really, we don't have much time. It's only another 2 months and a half. And if you're in that situation, don't feel embarrassed, because a good accountant will always help you and back you and help you to at least protect the wealth that you can retain. And lastly, hiring new employees. As I said, if you're an off-job keeper, then this is a great time to review your workforce. And should you be taking advantage of job maker hiring credit or the 50% wage subsidy for hiring new apprentices? So it's actually the time now to take action. One or all of those 5 things should be on your mind right now. And a good accountant will help you go through each one and make sure that you maximize the benefit of each one. I just cover the key areas that my advanced private clients we're working with. So asset protection is very important for business owners, because if you're running a business, that's a high risk activity. It's equivalent to high risk sports. What action do you urgently need to take to improve the protection of your family assets and wealth? Now, if you have not addressed that, now is never too late, but now is the time to do that. Because I see if you're still running your business in sole trader, or you're having your wealth in your name, then it's probably you're the one I'm talking to. You need to reassess that. Estate planning is something that you need to plan to ensure that your family wealth that you built, so much effort and hard work stays in your family bloodline. Okay, so it's not. So we have a lot of nuclear mixed families where after divorce you remarry, and if you don't have a bulletproof estate planning, you might go to other relatives that you don't intend to go to. So that's estate planning, guys. So if you have a family like that, then it's good to speak to your accountant too. The third one is power of attorney. Okay, so would you like to ensure that your financial affairs can still be handled properly if you are incapacitated in any way? Okay, given the pandemic, given the quarantine measures, given the health risk at the moment, I think everyone should review their wills and their enduring power of attorney to make sure it's updated. Advanced health directive, so that's your health important decisions are acted on if you're incapacitated in any way. So those are the advanced key areas that we work with successful businesses owners. The previous areas was the preliminary areas, but these are the advanced areas.
A lot to take in as a business owner, because as you're talking, I'm thinking about how it relates and what I need to do. And, some things that I have got in place, but I haven't reviewed recently, like the estate planning and then the power of attorney and things like that. Like I did that a while ago. So I think this is time that I need to actually get everything reviewed along with everything else that we've gone through today. So I think it's a great opportunity to, let's say, start fresh, start a plan and go through everything. All the things that you have done, let's review it. All the things that we can do, let's analyze it with the professionals, sit down and get that solid plan so that we can beat this pandemic. The best people I know, or who I'm going to go to, is Lan to review my plan. So I want to work with the team that knows what they're doing, who are on a mission to help people like me to make sure that I get the best out of this budget, so that I'm set up to take advantages of things that the government's allowing me. And I want to make sure that my plan is not just to survive, but I've got a 3-year window that I'm thinking about now, that there's so much I can do. So I would love to, I would just encourage everybody to think that way, that it's not just your next tax return that you should be thinking about. This is a medium term to long term that you can actually set yourself up with all these incentives that the government's now given, that is just absolutely wonderful for business owners to maximize, leverage and make work for you. That once they're gone, they may never come back. So here's a window. Let's maximize it. Let's do it. Let's take action. Let's call your professional, call your trusted accountant. Sit down and plan. Tell me, okay, if someone wants to come and talk to you, what do they need to do? Okay, so
I'll leave my details underneath the video to book your wealth for entrepreneurs strategy session with myself and my team. But what the session you can expect from ourselves is that we will first help you assess where you're at in your business, whether you're trading as a financial loss or break even or trading well. And then after that, once we identify where you're at, we'll help you identify where you want to go, right? So we'll help you create a robust tax plan for FY21 in line with the budget incentives and review all weak areas of your investment in business. Yeah, so it's really easy. All you need to do as an entrepreneur is to take action, which is to pick up the phone or type that email to schedule time.
That's great. That's great. So the pandemic has hit everybody and impacted Australia and business owners in a way that's never been done before. But we've got a plan now. We've got a way forward now. We've got strategies now, and let's together work through this. And if you're listening to this and you got value of what we went through today, please share it. I think every single business owner or everyone out there really needs to understand this type of summary so they know what to do next. This is what it's all about. We're trying to get the message out to let everyone know that they don't have to just depend on Dan Andrews to unlock the doors. There's things that we can do today, things that we can do now to take action, to make sure that we're prepared for what's coming ahead. Take the power back into our hands so that you can make decisions. So yeah, you can start pivoting or plan wherever your business is, no matter where your life's taking you, this pandemic's taking you, you still are in control. Don't ever forget that. That's the message that we really want to get out there. So share this. Yeah, Lan, do you have pretty much any last words that you want to cover and share with our audience out there?
I just wanted to say one thing is that your focus on what you focus is what comes to reality. So a lot of people are very dissatisfied with the way the government not allowing us to open our business. There is a small number of business owners that are doing really well, and they're the ones that pivot and focus on what they can do, what they can do for their business, what they can do for their wealth planning, what they can do for their tax planning. And we want to work, we are working with those business owners. And if you want to be on our team and working what you can do, well, what are you waiting for? That's what I'm saying.
Pick up that phone. Email that email address right there. That's what you should be doing. That's an action I can say that you can do today.
But it is a pleasure that the budget is a good one. Since it's been a good one. I've compared other budgets where they cut, raise taxes and that, but this is a good budget for business. It's a pro-business budget, guys, and I don't think we will have such a good one ever again. So don't miss this opportunity. That's what I'm saying. The next budget might be paying back the debt, so it might be increased. So you have a 3-year window to get going with your business plan and your business, your wealth. So don't miss out. That's all I'm saying. Okay? And I'll leave you with that.
Yeah, fantastic. So let's all work hard to build our businesses. We've got the tools now the government's given us. Fantastic. Sit down with a professional. That's all I can say. Well, thank you so much for today, Lan. And I got so much value out of that. I hope everyone watching this got a lot of value too. So don't just sit there, take action. It's in your hands now. You know everything that needs to know about this budget. So let's go out there and do something about it. Okay, thank you so much, Lan, and we'll see you on the next show.